Welcome to another episode of the Weekly Crypto Check-In, recorded on February the 26th, 2025. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, Robert. It's good. It's been a volatile month, so we
Yes.
once again get a eventful weekend in crypto, and,
Yeah, I was
some interesting headlines to talk about.
I was recording another crypto podcast with Casey this morning, and I used the analogy that February is turning into a volatility sandwich. And it's not a sandwich you probably want to eat. For me, that would be a turkey sandwich. So the bread is crazy volatile weekends at the beginning of the month and this last weekend, and in the middle, the turkey, a bunch of sideways price action. So
Yeah, we have
in some ways looking for February to be over with. Yeah.
Yeah, I mean, there's a lot of stuff going on in the background. I think from the standpoint of the economy, I was just leaving a lunch, as I was telling you, and the conversation shifted to talking about, the equity markets and kind of where we're at, and coming off of 2 years of, really good returns. If you're an investor in the S&P 500 or the Magnificent Seven.
Mhm.
So yeah, lots to break down, but we start with a hack, which is never fun when that's the first headline in crypto.
No, but the crazy thing is like normally these are long drawn out things, and investors
Yeah.
rarely see their money back, or if they do, it's an insurance process that takes a while by an
Yeah.
exchange. This basically happened and got cleaned up for all intents and purposes for the users of the exchange within like 3 days. So what we're talking about here is Bybit. It's an exchange out of Asia that they for everything that I've seen, they have the correct security protocols in place. They're using outside software vendor to help manage their wallets. There's something called multi-sig or signature in crypto. That means multiple people have to approve a transaction before it can be submitted on the blockchain and approved. In this case, 6 to 12 people, right? I mean, they had quite the list, which is in a lot of ways the best way to be doing it when you're talking about the amount of funds that might be in an exchange wallet. The software vendor that they use, they have functionally got compromised. The transaction that the approvers were approving that they saw on their screen was not the one that actually got approved behind the scenes. They were able to spoof it. So to the people doing their jobs, they did everything correctly. But at the end of the day, $1.46 billion worth of Ethereum was stolen. It was done by a group that basically is the North Koreans. They go by a different name, but the running joke this weekend was after stealing $1.4 billion worth of Ethereum, the North Koreans beat the United States to having an Ethereum reserve in place.
Well, I have some fundamental questions. So
Okay.
if the idea here is multi-signature,
Mhm.
so if I'm understanding that, that means that multiple people, in this case 6 different parties,
I think it
had
was
to
maybe more
sign
than
off
6, but yeah, a
had
lot.
to sign off on moving Ethereum, moving capital.
Mhm. Correct.
So the
And
software company behind all 6
well,
was
they use like a
was
software management system that they all
yeah,
functionally. I don't know the exact process, but they would maybe
sure.
log into. They would be
Yeah.
presented with the transaction, and they would functionally click approve. I think it's more complicated than that. I've never used that particular piece of software, but it's
But they tricked the software
Mhm.
provider that was the
Correct.
gatekeeper, the approver,
Absolutely.
and somehow
Yeah,
got all 6 parties somehow to sign off.
correct. And I don't know what transaction they were actually presented with. I'm sure it was a rather simple transaction, so they didn't
Mm.
think much of it. But the underlying system for that third party software vendor was compromised, and they were basically approving a transaction they didn't see. So
In multi
Sig.
party custody
Mhm.
arrangements that you hear about here in the US, could this have happened?
In theory, yes. I mean, like,
Okay. So
heck,
sharding your keys with 3 different providers, unless you were one of the 3 or one of
mhm,
the 4 that
right.
owned a piece of the key, theoretically, anybody that's custodying with a multi-institutional setup could be
Mhm.
compromised.
Right. I mean, yeah, in theory, I mean, there again, software is man-made. No
Yeah,
software is perfect. But, even in a situation where you're using multiple keys, like if I'm looking at it on the screen and it looks like I'm gonna say send um, Ethereum from one wallet to another, but I'm sending one Ethereum versus $1.4 billion worth. I don't think much of it because it looks like my normal process. I'm doing what I'm supposed to. I'm bringing my key to the party effectively. Um,
yeah.
transaction, and I'm doing my part. At first it was assumed this was like some kind of social engineering hack, but as more digging and more details have come out, it was the software vendor, unfortunately. So,
Wow.
and they're not the only ones that use or get used that software. So I don't know if I would assume the issue has been patched, but you never know.
So that
um
was the hack. Now you said
yes.
that it was also resolved, and client assets, were they returned or
Yes.
recovered within a
I
matter of
zero
a few
recovery,
days?
zero recovery
Okay,
of the funds, and, like,
so
let's
they're
go down that
gone.
path first, and then we got a
Yeah.
couple different segments to break here. So the funds were quickly sent off to an Ethereum wallet off exchange, and then they broke it up into, I believe, almost 100 different wallets. So they started just,
Wow.
like, spreading the risk, like, if one somehow gets caught, that all doesn't get caught. And then after they got it in those wallets, they started sending it through Solana to start basically washing it. And then the assumption is, since it's the North Koreans, they tend to want it to get it to Bitcoin is usually what they want to do. So they'll probably go from Solana into Bitcoin is the last assumptions and speculations that I've read. So
Okay.
you have that piece of it. Um, so to jump to the question you were asking, so how to get resolved. So in some sense, the Bybit executive team and owners really put on a masterclass on communication and how to handle a crisis. They were highly communicative. They were trying to share information when they could, and at least in my opinion. And they had enough liquidity as a business, and I guess liquidity slash the ability to go get loans. They filled their Ethereum hole of $1.4 billion in just under 3 days. They went on the open market buying it. They were getting Ethereum loaned to them, and they were straight just doing OTC transactions to kind of just wherever they could get it without really moving the market. Because all of a sudden you're on the market and everyone knows you're out there buying it. The price could have gone crazy with that kind of buy pressure, but it functionally didn't move.
Okay.
Um, so that's there's so
So
many
they
different
returned it
facets.
to the wallet where it was stolen out of.
Correct. So the users on Bybit that had Ethereum were made whole. Like they're outside of not being able to use their funds for 2 or 3 days. There was no real harm there. So
Okay. How many of those
good
customers
positive.
have stuck around?
There
Any
was a
idea?
lot of outflows of other crypto from Bybit. People like all of a sudden get real worried, rightfully
Yeah.
so. But some of that has started to flow back in. A lot of it flowed into Binance because all this is public, so you can kind of see where these things are going, which is, I guess, a bit of a short movie in itself to kind of watch the flows. People have
Yeah.
visualization tools to really make this a little bit easier. Something I just kind of like, in some sense, this is a little bit mean, but I got a chuckle out of was a guy posted that he had just received his let me make sure I get this right. He just got his FTX payout because they're starting to do this payouts. And literally the day before he had put it on Bybit. And
Oh,
then they
wow.
had this happen. I'm like, crazy
Are these
timing.
are these customers mostly in Asia that
Um,
were impacted?
yeah, that's their general audience. I know of people in the United States that use them, but they do the whole VPN thing. It's not a normal U.S. customer that would be doing it. Some institutions in the U.S. will use Bybit, but it's a little bit different. Well, institution like in a sense hedge fund. So
Okay.
um, yeah, it's a crazy story. And again, Ben, the CEO, owner of, I think the founder of Bybit, did a great job communicating, explaining transactions as stuff was happening after the fact, as they were trying to, I guess, contain the blast radius a little bit, and more so the expectations of people.
Mm.
Um, and I think the last bit that we'll talk about this on is somebody actually tweeted this out, and this kind of blew my mind because I hadn't put all these pieces together. If you look at Fridays in crypto since Trump was
Yeah.
the weekend of Trump being inaugurated. So on the
Right.
17th of January, he launched his token. You
Yep.
fast forward a week, that's when the DeepSeek dump happened. So DeepSeek out of China. You fast forward another week, that's when the tariff stuff, the Canadian and Mexican tariffs, the first weekend of February. You fast forward 2 weeks, that's the Libra launch, and then you had the Bybit hack on the 21st. So fingers crossed we don't get anything on the 28th. It'd be nice to take a week off here. But it's
Yeah,
been
the market, the market has basically been in the dumps on Fridays the last, 7
mhm.
weeks. So, yeah, not a lot of not a lot of asset classes, I guess, have probably performed all that well. I know the equity markets have
Mhm.
been down the last, it's like I said, 6 or 7 Fridays. So we'll have to see if this week breaks the mold, but crypto has followed.
Yeah, it will be I guess something to watch if nothing else. So
So I guess a final point on Bybit is par for the course still for crypto as a skeptic of the space, that's listening or that occasionally tunes into what's going on in crypto. Is this another black eye, or is this was a bruise that healed and it's just part of kind of the locomotive of innovation that's moving down the track?
I think it's the latter.
Okay.
Um, and I say that because largely because the way the Bybit team handled the situation. They could have left the whole sitting there and like there'd be all sorts of uncertainty. And then
Yeah.
then the rumor mill in crypto starts and good luck. It quickly gets out of hand and most of it is going to be false information flying around. So again, props to them for doing that. And I think that, regulations don't solve this problem. I mean, the industry's got to figure out what the correct solution for custody is. Um, in my opinion, it's still going to be accessible 24/7. It's not like I need to have a custody solution that closes and it just open on business hours. But I don't know. You've never heard of a major hack at Coinbase or some of these others. I just wonder, like, what are they doing differently? Because
Yeah.
they've got to target continuously the amount. So I don't know. You would never get that answer. I don't think, at least except at a high level at a conference where somebody's talking. But it's interesting to watch. As a tech guy in a previous life, I kind of appreciate these details and find them a little bit curious. So.
Yeah, it is fascinating because as we think about our digital lives that we live in now, where
Mhm.
where it is not hard to imagine a future where more of our information is out there, right? All
Mhm.
the identification, all the property records, all the assets, everything is out there
Mhm.
online on the blockchain. It just raises the question, and we don't have the time to pontificate about it, but how safe are your assets? How safe are things out there? And yeah, well, I guess my takeaway is I'm glad I have you to lean on to help explain these hacks, and not that $1 billion+ or Ethereum being stolen is ever a good thing, but
Right.
it does sound like there was some positive resolution.
Yeah. The last bit about this, I think the last thing I saw is, granted, it's mostly not in Ethereum now; it's in Solana because they've done
Yeah.
those transactions. But they were the third largest Ethereum holder the moment after the attack because they had that much holding. So it's just kind of interesting to see how, you know, $1.4 billion doesn't sound very consequential, but there's a rather amount of diversification amongst holders within Ethereum for the third largest holder to have $1.4 billion. So, anyways,
Wow.
we'll move on. Some positive news. I cannot believe we're already talking about this. So the SEC has already started pausing slash dropping,
Dropping.
dismissing some enforcement action cases that they were doing. Some of them were still in the phase where they didn't even take action. They were, I guess, working up to a Wells notice or right after a Wells notice. But the big one that first came out was Coinbase. They dropped their case against Coinbase, and they make sure I get this right. They dismissed it with prejudice. So like they can't bring the case back,
Hmm.
even if the administration was to change and blah 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 blah. Blah. It's
Yeah.
a big deal.
Yeah.
So it's not just Coinbase. They dropped their case against OpenSea, the NFT exchange. I believe that's based on Ethereum. they dropped or didn't follow through on their action with Robinhood.
Yep.
And the one that everyone at least seems to be waiting for at some level is the Ripple case. That one apparently is going to be more difficult to kind of drop, right? These other ones never had judgments in them. The Ripple case was already on to what was looking to be an appeal. So they've got to figure out how they're going to deal with that. I mean, there's a $125 million judgment. The judge has jurisdiction over at this point. It seems like, at least from the attorneys I'm reading online, that there's like maybe April, May. We could see that one wrap up. So it's going to take longer, unless obviously it can move quicker. All these other ones are moving quicker. So it's pretty cool to see an SEC that's trying to clean up a mess.
Yeah, yeah. I mean, I saw a lot of these headlines over the last week, and an avalanche of them, if you will,
Yes.
over the last few business days. So, yeah, we are not done talking about what's going on in the regulatory and legislative environment. I don't think we've obviously heard the end of change at the SEC. I know that we're expecting to start hearing more from Paul Atkins, the nominee to chair the SEC,
Yeah.
when that confirmation process gets started and gets underway. You got to believe he's going to get a grilling, and we'll have an opportunity to give a hearing of what his views are on crypto. But
Yeah.
there's a lot going on in the market, just
Yes.
more broadly than crypto right now. And I would think that a pause of a couple of months, just after all the news that came out post-Trump election, it will probably take some time on the Ripple case.
Yeah. And it was kind of rumored that this, and it does seem to line up with the way that they're dealing with these cases and they're working through them, at least announcing them, is they're working through the ones that have the most pressing court dates coming up, and they're working down. So the next court date for the Ripple case is April the 14th. There's a court case with Kraken that is in late March, so they could be potentially a little bit ahead of Ripple, from a news standpoint. But again, Ripple's case is much further along. No one else had ever really gotten as far as they got in the legal process. So I don't know. It's when the Coinbase one happened, I'm like, oh, that's cool. And then, like, you're right, it seemed like every single day last week, Wednesday, Thursday, Friday, and even Monday this week, it was more of them. But I think yesterday and today has been relatively quiet. But we will imagine get some news hopefully soon. So
yeah.
Oop, I forgot to. So our next topic is, again, the SEC being proactive. They were not interested in approving Ethereum ETFs that launched last summer that had staking as part of it. Ethereum's got staking native on the chain. You can think of it as, for listeners that don't fully understand staking, you can think of it as like an interest mechanism built in. There's an automatic inflation rate within Ethereum, and part of that inflation goes to rewarding validators and people staking. So in this case, the SEC has apparently been reaching out, trying to get industry comments. Shocker, that's the way that you should do this. And working through a process. The hunch is maybe, but even by August, we might see Ethereum ETFs be able to update their product offering to allow some staking, which would be pretty cool.
Yeah. What's your take on the benefit? Does that increase interest in the products that are out there, the ETFs that are out there?
Well, I think I would assume that all the ETFs convert to have staking as part of it. I can't imagine some do and some don't, because the ones that don't are obviously just taking it for themselves.
Sure.
So I'll say that up front. I think that for the traditional TradFi person, if I tried to put on a hat like that, this is a cash flow mechanism, right?
Yeah.
And that starts to speak a little bit of a language that they understand. And I think that helps coax them along on the crypto education journey. I don't think, staking is the end all be all to the right part of a portfolio. Because you have to understand why they're staking. It's not just free money. So but I think it is helpful. So,
well, there's been some talk this year about, is this the beginning? I don't think it's going to get resolved, but is this the beginning of a cycle where we start to see more utility from some of the tokens, right? Now that I don't know if you would agree, Robert, but like the characterization that Bitcoin is digital gold and can be looked at as a that's its utility now, right? And maybe other people would have different views, but that is that
Yeah.
is a way to think about it in the context of what purpose does it serve in a broadly diversified portfolio, okay? And if you think about gold or real estate, not lumping them all together, but if you think about
Mhm.
these are inflation hedges, or their assets in times of inflation, where people say, own real estate, own gold, own
Mhm.
infrastructure. So if Bitcoin falls into that category, are we going to start to see more crypto assets, altcoins, that have characteristics that we can actually start to put value around, right? Cash flows
Mhm.
and other things like we see in other traditional assets. And that's what I'm hoping that we see more of
Mhm.
going forward, right? Is the traditional finance folks can start to see the space because it has the underlying characteristics of other assets, right? It's either a
Mhm.
hedge, or it's creating cash flow, or there's something there.
Absolutely, and I think, I think what's more likely, I don't know if it's drastically, higher percentage, but I think what's more likely is we end up with a slightly different definition that we've never had before, right?
Yeah,
It's like half commodity, half something
yeah,
else. We end up with a new definition, and maybe it's something to deal with how much utility is happening on that network in any given period of time. You end up with a
right,
different kind of metric,
yeah.
because I think these will be valued and traded in different ways, just due to the nature of them being different.
Yeah, and
Um,
maybe the economics of the network will
correct.
be where we look to underwrite, if you will, to
Mhm.
sort of compare and contrast. Because without the comparison, it's hard to know if a network is better than another network, right?
Yeah,
So I think
100%.
it's all gonna flush out over time. But this is, I guess, it's a step in the right direction. A lot of this, as we've said for a long time, begins with getting more clarity from a regulatory standpoint.
100%.
Yeah,
Couldn't say better myself.
yeah,
So our next topic, and we kind of briefly mentioned this when we opened the show. So
yeah.
the market sell-off that happened this last weekend in the beginning of the month. There's a lot of fear in the market right now. Obviously, the way down as of yesterday. I think Bitcoin was in the mid 80s, and some altcoins have, or most altcoins have traded off at a higher percentage than Bitcoin did. What's interesting is this last weekend and this sell-off is it's not all the Dino tokens, but most of them have traded and sold off less than the rest of the altcoin market, but not quite as good as Bitcoin. So, just slightly better than Bitcoin. So their dominance kind of went up, if you look at it from a market cap percentage standpoint. But it's a as much as you don't want to see downturns, everyone wants the price to always go up. The it If you look at the 2019-2020 cycle of crypto and you overlay it with how we're doing in 24-25 right now, not necessarily on the same day, but the same pattern, it is crazy how much of a mirror we have right now. This was in some theory, the last liquidation event we needed before we go up into the right, in a strong way. Again, no financial advice here, but it's kind of crazy if you start looking at patterns. So,
Yeah. Well, look, I mean, there there are different ways to look at markets, right?
mhm,
There's the technical approach, and looking at charts and patterns and volumes and prices. There's the efficient market hypothesis approach, right? Like,
mhm,
and fundamentals, and all these different ways to look at the market. I think what you said at the beginning is absolutely spot on, which is there definitely is uncertainty. And what to me is so curious, and I mean, really fascinating to talk to people that follow the market or interested in economics and the market cycle, is what's happened in such a short amount of time since November, when the seminal event, like we have to say it was the
right,
election, right? Like
totally.
everybody was focused on the election, and what happened in the aftermath of the election is we saw all asset prices react
Mhm,
positively. you
yeah,
know we were going to get we were going to get lower interest rates. We were going to get, right, a less regulated environment from the
mhm,
business standpoint. We were going to see more animal spirits with respect to M&A, crypto, pro crypto. And when you look out now to the end of the month,
mhm,
oh man, I don't want to say disappointment is the word, but I think that a lot of people look at where we're at and say, gosh, there is so much it's whether you call it noise or headlines or it's Doge, it's
Mhm.
tariffs,
Yeah.
it's you know geopolitical. I mean, all these things. I think it's just a lot for the market to digest,
Yeah.
and there seems to be more of a risk off posture, and a backdrop forming
Mhm.
that maybe we are going to be in for a correction, right?
Mhm.
Like, or maybe there is something out there in the ether where there's fear that there's just another shoe to drop, and
Yeah.
you know,
These are the moments. Again, I largely only focus on crypto,
yeah,
but the sentiment is pretty down, negative right now, and
yeah.
like that's where I start to get excited because I'm
And
like,
is it
yeah,
down because it was so high and the hopes were so high, or is it down because we just needed a correction?
I think you kind of mix in things in crypto. There's a good amount of people that buy and sell or quote unquote traders on crypto with leverage.
Yeah,
And those markets get wiped out so easily. The idea that anyone uses leverage in crypto period blows my mind. Like
yeah,
it's already
yeah,
volatile enough. You can get great returns. Why do you need to throw gas on a fire? Because it
yeah,
probably is going to blow up in your face.
yeah. So you think the
Um,
sell off, is it more of people that were levered, and they're
mhm,
just, yeah, they're having to deal with the consequences of that leverage, and
right. Well,
it's
that
causing a whipsaw in the market.
correct, and that coupled with the Bybit hack that happened, that kind of thing will ripple through the market, and
Maybe
kind of
regulation is going to actually take a little time.
correct. I mean, everything's going to take longer than we want.
Yeah,
In the
yeah,
honeymoon phase is probably over.
right,
So
right. Yeah.
it's
Yes, maybe some of the press around, like, the Doge, whether it's, efficiency or not, I don't
mhm,
know, but there's just headlines around it. Same with the meme coins, right? It's
yeah,
it's it's just created additional things to digest. So,
mhm,
I mean, I know we've talked about this, and again, we're not here to give advice, but do you continue to see in the charts and patterns and the approach that you um, referenced earlier about looking at cycles in the market, do you continue to see that this year is going to be more like what we've seen the first part of the first quarter? Like, just
yeah,
January was great, for all intents and purposes. February looks to be, much more volatile. What's
yeah.
your thought?
My take is as long as Bitcoin doesn't except below the $85,000 level on a daily or certainly a weekly basis,
Yeah,
we're still on track. That is kind of the make or break area. It would be off pattern at that point, then kind of all
yeah,
bets are off. My guess is we fall basically down all the way to where Bitcoin was at pre-election.
okay.
So you're talking high 60s.
Yeah, I was going to say in the 65 to 70 range.
Yeah. So
Yeah. And
that
because we touched 100 post-election,
108.
100,000,
Yeah.
108,
Yeah.
in the euphoric days after, and now we're trading in the mid 80s,
Yeah. So
mid
I
to high
think
80s. Yeah.
we are we're on the edge, but I think we're on pattern, and I still think we're kind of wrapped up by midsummer. Excuse me, by the end of Q2. So I guess that would be early summer in some sense, but it's a it's going to come fast and heavy, assuming it does, and it's going to be you're going to quickly think it's always going to do this for the end of time, and that's how people get trapped. And they any sort of price predictions they had in their head where they would sell, they start moving them up because this market is just so strong. Blah blah blah. You start hearing crazy narratives, crazy prices, and in that moment, that's the moment we should be ringing the cash register. So hopefully
Got
that's
it.
sometime soon.
All right.
So
Well, moving
our next,
forward, our big friends over at BlackRock are launching a Bitcoin ETF in Europe.
yeah, I don't know how big of a reach that they have outside the U.S. I know obviously they're humongous in the U.S., but what
Yeah.
kind of sales force or market penetration they have there? But it was making some headlines that I saw that they're launching an ETF. I think over there it's an ETP if I'm not mistaken. So
Right.
basically the
Yeah.
same kind of product, but
Yeah. But they're
um,
big. I mean, make no bones about it. They are a global force, and well, they may not have the market penetration in Europe. It's significant.
mhm.
Um, so yeah, this is big news.
Yeah, and this and even this next topic about Citadel right here, right? Like
Yeah, Citadel. Yeah,
while they're each not going to drastically change the market, all you add up 1,000 base hits like this, and all of a sudden it's very different.
yeah, yeah.
Around
You're
the
in the
world.
Hall of Fame, right? Bunch of
Yeah,
singles, right?
yeah,
Citadel is a powerhouse. I mean, they do a significant amount of just the daily trading volume, or execute the daily trading volume for, stocks
Hmm.
here in the U.S. So for them to start offering and accessing, allowing investors to access the Citadel platform for cryptos is a big move.
Yep.
So
Indeed. So we don't have much to say on that one besides what you said there. I just
yeah, they're these
the
are real
headline.
these are real headlines. They're big institutional players. They
Mhm.
may not be household names to everybody. Certainly, if you talk to a financial advisor, a wealth advisor, an institutional asset owner, they're going to know BlackRock and Citadel, and like you said, the thousand base hit type of thing. The more that you see these firms moving into the space, they don't make these moves, number one, without some degree of comfort, if you will, that the space is there, and they two move into areas where they know they can make money
Oh, 100%.
and
And
there's opportunities. So
am I correct in thinking that Citadel was part of the whole meme stock stuff at AMC and or was
yeah,
that
they
no?
were yeah they were involved in that. Yeah, Citadel
Yeah.
was. Yeah, yeah. Ken Griffin is the founder of Citadel, and he
Yeah.
started trading stocks in his dorm room, at 18 or 19 years old, and he's now, one of the world's, 10 richest people or something. So
Yeah.
yeah, they've relocated the firm to Miami, and so we're in Chicago for a long time, but left Chicago and are now in Miami, and just a powerhouse hedge fund, big trading operation platform,
Mhm.
making markets, and now crypto.
Very cool. So our last topic, and there's not tons of news here, but we have been talking about walking up to the line. Some stuff would be happening, but there's three states: Montana, North Dakota, and Wyoming. And Wyoming is the one that surprises me there, and we'll get to that in a second. Have all rejected bills for state managed Bitcoin reserves over volatility concerns. Okay, if you think Bitcoin is volatile, the rest of crypto is crazy volatile. Yeah.
Yeah,
And I guess from a traditional sense, Bitcoin is volatile, but it's all perspective. But in a kind of jumping back, the reason why I really kind of caught this one was the Wyoming piece. Wyoming has Senator Loomis. She is
right.
the one trying to push for the national Bitcoin reserve, and all of a sudden her home state can't get it done.
Yeah, Cynthia
Um,
Loomis, the senator.
yeah,
Right.
correct.
Yeah, yeah,
Um, I think that we're going to see. I think this is the beginning of a pattern. I don't think there's many states going to pull it off. I think it was a bit of a press grab of sorts to seem like a cool state or hip state, whatever you want to say. But we will see how that plays out.
yeah, yeah. I'm eager to see what the hearings look like with the nominee for the SEC, Paul Atkins, and to see, now that some of the euphoria in the immediate reaction to, that crypto had, and pro crypto folks had, to Trump's election, the real work begins. You know, like the
Indeed.
real work of actually trying to get laws passed and get stuff in place. The horse trading, all the things that go into, being an elected official. Like, we'll see how important this really is, because we have the midterms, around the corner. We
Mhm.
know that the PACs that are pro crypto have raised a lot of money.
Yep.
So yeah, we're going to see if this was an election issue that's turned into something that, voters are going to speak with their feet, or is it going to kind of die out because so many people have stopped talking about crypto,
Yep.
because they just fear, like, it's entering a bear market. So
Hmm.
lot to watch over the next few months.
Indeed.
Yeah.
Thanks for joining us on this episode of the Weekly Crypto Check-in. To stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-in.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.